Alright, so we're going to go over the crude oil chart. Basically, what you have is cause or distribution. You know that only afterwards, meaning you don't know that in foresight. You only know it in hindsight, which is how you're supposed to know it. Because I mean, the idea is to enter on the retest and wait for the market to prove itself. So you got 102, 112. This was the initial selling waves, the high volume selling waves. And when you see something like this, antenna goes up. Eventually, you have this 52 and 26. The 52 is effort because it can't go above the 26. And most importantly, it's confirmed by this 161 down. The 161 down says that your bear forecast was correct. Now, the only issue is that you got 145 up and goes to 132 and 92. So if the orders were established, the stop placement needed to be here. Anything less would have been there would have been a shakeout. In any case, after this counter trend up, you have this is weakness. It's straight down, just like a dump. 1, 2, 3 bars straight down. Good volume, wide spread. Again, you want to look at the spread and the volume together. And you see that, all three are thrusts. Alright, now that's pretty bearish. If all of them are thrusts within the wave, that's it. I mean, that's weakness. Then after that, you get this 17, which was the best opportunity, because the 17, this is really important, is lowest volume in the entire, all that I can see over here in the chart. So that was the kiss of death. The 17 followed by what? A thrust. The 17 followed by the thrust below was the trigger to go short. And now you're in the markdown phase. And as the market is moving lower, you see 83 up, 27 down, 56 up. But again, I really don't think that this has much, much cause. And it looks to me like it's kind of retesting the breakdowns. The breakdown is this breakdown right here, and this is just like going right into the breakdown area. And now it's followed by two more thrusts over here and here. That covers the oil market. Let's move on to the next market. Look at the yen. The yen, it was in an uptrend, and then what happened? You had this. So massive selling, followed by lack of demand, and this is just textbook. You got massive selling, followed by lack of demand, followed by a retest. Retest, effort, no volume here, followed by that thrust, and you get this move. This was I mean, I think it's just textbook. So after that basically explains this trend. And this is the typical sign of weakness, LPSY, followed by a retest. Sign of weakness, LPSY, has a break, and then just comes back and tests. I guess you could call this ice, but it's interesting how it tested the low volume area and then just fell off. So this was a really nice move for those who got it. Next is the over here. What you have is 28, 20 down, 28 down, 8, 27. I really don't see anything too clear in this. I guess you want to call it a trend. This doesn't look good. It's not classical. It doesn't really have anything like a change of behavior or a sign of strength. What's interesting now is this move. this is an interesting move because you have heavy selling. You know, initial selling was on 53 and 45. You have 45 here, 29 down. So we'll see what's going on here. Areas to be looked at or marked are right here. That and this. These two ranges, this range needs to be looked at. You see the development of cause within this range and see what happens. Next is the euro. I don't know what happened here, but the only thing that really interests me is this piece right here. You know, you have 78 up, high volume, follow through, pulls back, low volume, continues higher, and basically tags this area here, and then is now going sideways. You can't, I mean, it's in a range. There's nothing more to be said. This was effort though. This 14 up, 48. This was effort and just pulled back slightly under, just back to like the support area. You got, you know, oh wow, I didn't notice this. This is important. That is important. Alright, let's see if what's going on here. 84 up is the highest volume there is, coming from the support area. Pulls back 37, 26, 13, 14. We'll see how this trend develops. As you can see, typically trends start with high volume, and then the low volume testing, what they call in the Wyckoff method, sinus strength LPS or sinus weakness LPSY. It's just you know, supply and demand. A lot of supply is your sign of weakness. Weak demand is your LPSY. A lot of demand is your sign of strength. Weakness is your LPS. Right? Both, remember, LPS and LPSY require low volume to quantify their weakness. In any case, over here you have 84, 37, and nothing more to say other than this is an interesting area to look at. The reason I say that is because we had high volume, we finally have low volume, and these two up bars have good range. Alright, now it's still a sluggish trend, so we'll see if it's if there's a breakout or breakdown, but it's definitely like not there's no momentum. Next market is the notes. This was 75 up, 15 down, thrust, goes back to test this area. And nothing more to say other than there is some cause here. There is cause there, and there is a thrust there. You can't really go short, even though it's coming from a downtrend. At this point here, where you have heavy volume on the 75, pull back down on 15, followed by a thrust, that will not allow you to establish a short. This trend can continue higher because there's cause, high volume, low volume. This is your sign of strength. This is your LPS. and this is your breakout. 1, 2, 3 bars. Here's your breakout, and this is a sideways consolidation. You really can't go short. You know, you can't go short here, even though it might go to this area. You have to wait for breaks. Okay. Next market is the gold market, and over here we had low volume here, and what caused this reversal? Oh, I shouldn't say caused, but what was the tip off? Well, these two bars here on big ranges. This was saying that the CM wants to take this higher, and he did. So the current position is that it went up from here to here, and now this is bearish. But we'll see. 87 is the highest volume in the uptrend. The highest down volume in the uptrend is right here. And so far, there seems to be a lack of demand, but there's no confirmation yet. What you have is 87 down, 14 up, 12 up. The bulls, they haven't totally backed off yet, because you see this bar. Look at the close. If you see 12 volume, you basically think, looks bearish. But if you take a look at the price as well as the volume, you notice the price has a high and close. That in itself is telling me that this is going to go back to, that this is not ready to short, A, and B, it has a probability of going back to this area to at least test this breakdown here. All right. So look for that. So it might form some type of apex, you know, and then pop. Or so take a look at how what it does when it approaches this area is important. For now though, I don't think a long or short can be established, because on the short side you have a bias because of heavy selling, and on the long side they're telling you that they want to take it slightly higher, at least slightly higher, because of this high-end closed bar with a thrust, telling you that, you know, they want to take this higher. That's all there is for today. Thank you.